we're going to start to see the types of enterprise-led, high-quality application deployments that will not just be a piece of news, a soundbite, but they will be a seismic shift in what's happening in the ecosystem.
I'm the new best thing, better than you've ever seen. I'm the new best thing, I'm gonna be the king. I bring that ching, ching, ching. Yeah, I'm the new best thing, I'm the new best thing.
Hello and welcome to Hedera Forum. We're happy you could join us again. I'm joined as always by Brandon, and we're thrilled to be able to bring you another episode of the forum. As you guys are aware, this is an effort that is produced by the Hedera community, and we're excited to have two guests today. Scott Teal, who is a partner with DLA Piper, who happens to be one of the first council members, the first 5 for Hedera, and we'll also be joined by Jeff with BCW Group, who's working with DLA Piper on an exciting new use case called TOKO. Brandon, any thoughts about this week's episode?
I just couldn't be more excited. I mean, it's our first council member that we've had on the forum. It's also our first council member that actually has a use case. So I'm just looking forward to it.
Me too. And with that said, let's jump right in here. And Brandon and I are thrilled to welcome in Jeff Chui with BCW Group and Scott Teal with DLA Piper. Welcome, gentlemen. Thanks for making some time for us today.
Thanks for having us.
Thanks very much. Good to be here.
So why don't we just start with some brief introductions. Scott, I think you've recently been on Hedera podcast, and anyone who follows the project closely is probably familiar with who you are. But can you give us a little bit about your background and how you came to know Hedera?
Sure. So I'm a technology lawyer working with DLA Piper, a global law firm based in Hong Kong, but have spent a fair bit of time in different parts of the world, including Europe and originally from Australia. I'm also a computer science grad, interested in tech. I've always been a tech lawyer as a result of that. And one of the things that we've been very interested in is blockchain technology, the use of blockchain technology, not only in applications for our clients, but how we can also leverage, DLT solutions within the way we go about providing solutions to our clients. So sort of looking to bake these into the job of lawyering, which is something that brings together my two sort of passions around tech adoption, but within the legal industry that I work. So we spent over a number of years learning up, skilling up, looking at the different projects that are out there, and that led us to Hedera and the journey that we've been on with them in terms of participating in the project and getting an increased understanding in the way their technology works and how we can use it in the types of applications that we've been building.
Thank you, Scott. And Jeff, can you just give us a little background on BCW Group and how you guys came to work with DLA on this project?
Of course. So I lead up the digital consultancy practice here at BCW Group. BCW Group is a boutique consultancy really focused on digital payments, digital assets, and also DLT applications in enterprise space. How we got involved with DLA Piper is quite an interesting story. We first heard of TOKO as a project and thought it was a great disruptive agent in the industry for DLA, its clients, as well as the partner ecosystem. So when we first started, the engagement was mainly to accelerate this transformation program and helping DLA with their governance, their go-to-market strategy, and specifically their technology readiness. So overall, it was a great experience, and looking forward to doing more with Scott.
Well, thank you guys again for making time. We have prepared a few questions, and with that, Brandon, why don't we jump in?
Sure. So the first one here, Scott, as one of the first council members, what drew you and DLA Piper to Hedera in the first place?
It's really interesting to think back actually to that journey that we went on, because it was a bit of a unique journey. The idea that a global law firm was one of the very earliest members of a governing council of a blockchain platform was. I don't think Manson, Lehman, and the team necessarily expected a law firm to be at the forefront of those decisions. we were in the process of looking at DLT applications that were complementary to what we do as legal advisors. How we can get involved in solutions provision more than just reactive lawyering, and that was really something that I've been very keen on. Is rather than just being the lawyer who waits to be told to paper a deal, how do we actually get more ahead of the conversation and be talking to clients about what we can do. And for me, the combination of legal services, consultancy, and technology solutions was a really, really obvious play. My background in computer science has, always had me thinking in that way. And we were analysing a number of opportunities. In fact, it was Kyle from BCW who very first introduced me to Hedera. I don't know exactly the date, but it was 4 or 5 years ago now. And as lawyers, we come at any problem from the point of view of what's wrong. We're glass half empty people. We're very good at spotting problems. It's a miserable existence, but that's kind of who we are. And so we went and kicked the tires on the project, and we were thinking about, as we'll no doubt come on to, tokenization solutions in particular, and we were then looking at marrying up technology attributes with the types of enterprise grade solutions that we want to build, not only for ourselves and for our own business, but that we want to be taking to clients. And the more we looked, the more we not only identified that the attributes of Hedera, and particularly maybe the consensus service, were perfectly suited to some of these applications, but in our mind it actually started to really unpick some of the deficiencies in some of the existing blockchain platforms, and rolling the tape forward, which we, I think as lawyers we're able to sort of see what's going to need to happen with, our regulated digital asset, for example, and what are the attributes that a regulator or an investor or something, in the ecosystem is going to expect. And then the attributes that we were then looking at from the Hedera Hashgraph, whether it's around data privacy or scalability or finality or all these sort of features, they really fit very well in a fully formed, functioning digital asset marketplace, and we're still at the ground floor of that journey. That is going to require these things. These are prerequisite technology attributes. So there was a real deep dive on the tech, and a recognition that these were the types of features of that platform that were going to be essential to where we were wanting to go. The other piece around it, which was very exciting actually, was the opportunity to participate in the governing council. And not only because it gave us obviously a role in sitting at the table and discussing and helping formulate policy and decisions around what's going to happen with the tech, and what's going to happen with the project, and all these really interesting debates, but actually probably more importantly for us, we're a big law firm, but we're just a law firm, and I'm acutely aware of the limitations that brings to our perspective on the world. It makes us great lawyers, but it doesn't necessarily mean we do an awful lot more than that. And when we looked at the vision that the team had around the governing council, and some of, obviously we were very early doors, but there were a number of conversations in play, and we met some of the aspirants around that. It became very clear to us that we were going to be joining a consortium, a group of kind of like-minded businesses, high quality, blue chip, large scale organizations that by definition, because they're looking at joining this council or joining the council, have an interest in blockchain or distributed ledger technology. And not only that, but Hedera technology in particular. So suddenly we had this community of like-minded enterprises that were interested in doing things with this tech. And they were all very different to us, because they're tech companies or banks or telecommunications providers, or there's obviously a good mix of industry and sector spread within the council, which is still a work in progress, but it's already a very diverse group of organisations. So for us to be able to suddenly have kind of a ready formed group of partners to do things with was hugely attractive, because otherwise we knew we were going to need to build those types of partnerships. And here we were now going to be in a forum where, well, the door's already open, and I'm meeting with these guys on a regular basis, and we're having conversations at council meetings and around there. So yeah, it was really attractive to us that it gave us a way of joining a like-minded group of enterprises with very different skill sets.
So yeah, it's not just that you're governing Hedera, but it's networking. for your company as well.
Absolutely, and some of those businesses are clients. Obviously we've got a very large client base. Some are not clients, but more importantly, I think it's the networking for collaboration.
Sure.
And there may be opportunities that come out in the traditional sense, but I think the real excitement for us is, and we're working on these projects now, and we're starting to collaborate more directly with some of our council members. How do we put something together? How do we take what we're trying to do and you bring what you're trying to do, and let's do something together and take it to market together? And I think that's a really exciting opportunity.
It's fantastic. Great.
Thank you for that, Scott. Sticking with the theme of the Hedera Governing Council, we understand that there are committees within the council, and you mentioned earlier on the lead-in that you're on the board of members. Can you expand a little bit about what the different committees are and which, if any, DLA is active in participating with?
Sure, and I won't pretend I've got the comprehensive list of the SIGs, the special interest groups as they're called. So I'll just touch on the ones I am aware of. There are committees around CoinCom and dealing with token economics and sort of HBAR related issues. There are special interest groups looking at regulatory and compliance issues, and one of my colleagues, Mark Radcliffe, who's a venture capital technology sector lawyer in our Palo Alto office, he's a DLA rep on the compliance and regulatory committee, and there are obviously lots of regulatory issues, not least of which relate to securities compliance issues in a US context. So one of my US partners, who's a specialist in that area, obviously sits on that committee. There are two other committees that I have a role in, and when I say I, it's the royal I. My team have joined some of the other committees. One is the data. I don't want to call it data protection. That's me jumping into being a lawyer. But the data committee. So the use of DLT technologies to, I like to think of it in terms of commercialization of information. I mean, one of the things I always do with clients, we do a lot of data. Our team heads up the data protection, data privacy work stream. But one of the things that I like doing very proactively with our clients is around creating value in data sets, using legal issues and compliance issues as the building blocks of that. So we're now exploring how do we use DLT, how do we use Hedera to build solutions, or to help our clients build solutions that create value in databases. Obviously, there are going to be compliance and legal issues, and we've got laws all over the world. California, obviously in the US, GDPR in Europe, rights to be forgotten. How do you, and again, this is probably back to my earlier comment about some of the attributes of Hedera. The right to be forgotten is a real problem on an immutable blockchain.
Sure.
Hedera as a graph, which is not immutable, doesn't have that problem baked into its architecture. I don't think that's necessarily how the hash graph was formulated with that in mind, but it is one of the sort of technical attributes of it that fits very nicely then with the ability to segment data and to deal with issues like not having immutable records of personal information that are going to be illegal from a European law context. So they're the types of issues that are happening in the data stream. The other stream the other SIG that we're heavily involved in, and my colleague Andy Gasworth, who's the CTO of our business in the US side of DLA Piper, is the DLA rep on that. And just to mention, Venus Chung from my team sits on the data one I just talked about, but Andy sits on the special interest group around tokenization. And I obviously participate in that group as well. So we're looking at opportunities within that, and in many respects, it's probably the sweet spot of where our focus has been in terms of the application and use case that we've been building. So we're probably a pretty active member of that special interest group and driving some of the conversations. But there are plenty of other interesting use cases and examples that are coming in from participants. And the special interest groups aren't fully limited to council members. There's obviously a very strong influence and heavy representation of council members and extended sort of individuals from council members, but there is also the opportunity for participation in those by non-council members as well. So that's an interesting mix. It provides an injection of sort of further external third parties that are doing interesting things and interested in this tech without them having to have sort of gone through the process of being on the council yet. So it provides a slightly sort of extended, back to Brandon's point about the networking opportunity of the governing council. These SIGs also provide a networking opportunity in a slightly broader context, but and within a fairly defined area of interest. So they're the ones that we're actively working on, and I know there are plans to bring out more of these special interest groups.
Okay, good. So, what have been some of the greatest challenges and/or disagreements on the council?
Oh,
get into it now.
Yeah. One of the greatest challenges, I think, is, well, I want to start with a positive, actually, rather than challenge and disagreement. I want to start with my overwhelming surprise at the level of openness and sharing of information that occurs. I work in a law firm. A lot of my clients are dealing in sensitive, proprietary type ways, and I spend my professional life is filled with people that are paranoid about who's going to steal stuff from them.
Sure.
One of the things I find really exciting and refreshing, and this isn't probably just the Hedera Governing Council. I think it's probably a little bit about the ecosystem of blockchain technology and the sector as a whole, is that there is this kind of more than proprietary is a desire to build a future, and a very different future, and it really comes through in the way that I think many participants in this ecosystem that I talk to, there just isn't the same level of paranoia about information sharing. And so what I find at the and maybe that's because the market isn't sufficiently mature that people aren't getting proprietary yet, and they probably will, but at the moment it's just this incredibly open dialogue that's happening. And I just want to share a little story. It was a council meeting we had at the first annual assembly up in Seoul in Korea. And at this stage, I think there was only 6 council members. So we're going back a couple of years now. And we were asked to talk about what we were planning on doing. And I was sitting there and, what do I say? What do I not say? Do I want to give the crown jewels away and what I'm thinking? And because this is the paranoid lawyer and, proprietary mentality. And as it happened, I think I was last or second last as we kind of went around the table. And just the level of openness and sharing and idea swapping, and this is what we're thinking. And not only this is what we're thinking, what do you guys think? What am I forgetting? Type approach to it. So I think it's not an answer to your question about the challenges and disagreements, but I think it's been a really refreshing, piece for me around how this is operating and how people are wanting to share information and learn from each other and then look for opportunities to collaborate. I guess I can't completely avoid your question about the challenges. I think one of the challenges I find is the council kind of has reps from each company, and we've got 3 or 4 people in our business that are pretty actively involved, and most of the other council members have a small group of people who are actively involved. And while we're one of the biggest law firms on the planet with about 8,000 people or something, we're actually, I think, probably the smallest company on the council. So many of these companies are enormous with tens, hundreds of thousands of personnel. And I think one of the challenges is how to make sure that everything that's maybe going on within those businesses actually is connected to Hedera. So we found out, I'm not going to name names, but we found ourselves talking recently to another council member and people within that organisation that were focused on a technology, a blockchain technology project, and we were talking to them about Hedera and what we were doing with our token engine. But when I tried, when I said to them, "Oh, look, I haven't seen you on the Hedera Council, and these are the people in your organisation that I am working with," and I said council members, they'll say, "Oh, yeah, we don't know them." So I think it's just the reality that the scale of the enterprises that are involved means that sometimes it can be a little hard to connect all of the dots, within those organisations. And we've seen this in our own organisation where people have come to me through my network and said, "Oh, apparently I've been talking to someone about Hedera Hashgraph. Apparently you know something about that." So it happens in our own business. I think it's just the nature of we're in 38 countries, 95 offices. Of course, not everyone in my organisation saw the announcement and knows that I'm the person. So I think that's one of the challenges is filtering all of the opportunities, into the council environment. There probably hasn't been a lot of, I'd love to have a great war story about a huge disagreement and people storming out of, a council meeting and, not on my watch, but there hasn't really been a lot of that. I think there are. There's been a learning process. It's not. It's probably not easy for organisations to come in and very quickly understand all of the moving pieces. The role of the council is pretty broad. They have a very large oversight role to many aspects of the project, whether it's technology decisions, HBAR related, decisions, regulatory decisions. There are quite a lot of areas that are ultimately delegated to the council, and I think one of the challenges is to get people up to speed on all of those, particularly the newcomers. And because I've now been involved in the process for a few years, you see the kind of newer joiners. And then they attend, and we're all talking about things that we've been talking about for 2 or 3 years for those that have been involved for that length of time. I think that's one of the challenges is getting the newer council members up to speed. But there haven't been huge disagreements about anything. I think it's more just the building of this very sophisticated group of large scale enterprises into a cohesive and skilled up unit is probably where the it's a work in progress. It's definitely happening, and council meetings are becoming richer as you can see people actually first meeting, quiet, listening, learning, then they start to get a little bit more engaged. So that's an ongoing process and not a surprising one.
Yeah, we're just trying to see if we can find any drama, but it's good to hear that it's mainly collaborative. Thank you.
I'll see if I can lob in a grenade the next one, so I've got a better story to tell you.
It's only a matter of time, right? It's human nature. There's bound to be some disagreements, but it sounds great. Thanks for the insight. The community has access to meeting minutes sometime after the meetings happen. A little bit of insight there, but nice to have a candid dialogue and a little bit more information. Our viewers will appreciate that. So let's move on now to what I think we're mainly here to talk about, which is a new project that was announced called TOKO. And Scott, I see just to your left this beautiful piece of artwork, which we will touch on here in just a minute. But Jeff and Scott, between the two of you, maybe we can talk a little bit about TOKO and what it is and what type of goals you see achieving with this project.
Yeah, maybe I'll start, Jeff, and then throw to you on some of the downstream stuff, which I know you guys are really bringing a lot to the table around that. I'm not a finance person. I'm not a corporate lawyer. I'm not a finance lawyer. And so I come at the issue of investments, stocks, shares, equities, debts, investable sort of instruments. I come at this whole market unencumbered by too much actual knowledge. And I think that's been really uncomfortable, particularly for a lot of my colleagues, but also I think it's been really important in the way we're looking at this. And so what we were, the ambition, okay, let me start with a really big picture ambition, which is what we would like to do is to help our clients to do creative financing solutions using asset-backed securities in a way that will drive liquidity, new market participation, creative new ways of financing projects, and the thing that I think has probably surprised me the most as I've gone into this, because I sort of crashed into, wouldn't it be great if we could, tokenize everything and ultimately create, liquid secondary markets to enable trading of these asset-backed digital assets. And in a way, it's the way cryptocurrencies trade today, but with actually something behind them, because there's an open question around what is really behind Bitcoin. Nothing. So what we're talking about here is, well, we want to take something, and the piece of artwork obviously is an example and something of a test case that shows it. And a group of my partners here in Hong Kong have effectively invested and become fractional digital owners of a piece of this painting, each. And it's obviously it's not an enormously expensive piece of work or anything, exciting like that. It was really around proving the technology and the way it would work. And it's doing so, and we're still actually working through some of the processes around that. But to be able to fractionalize assets in a way that current markets don't provide. And as I've gone into this sort of journey of learning about what it is I don't know, about financial instruments, about securities regulation, about the way you go about listing things on a stock exchange in the traditional way, it's been overwhelming to me, the amount of opportunity that exists. And every time I learn something more, I go, really? That's the way it works? Couldn't you come up with something more time-consuming, less efficient, and more costly? Because if that was your ambition, that seems to be what you've created. And I mean, a lot of it's wrapped up in investor protections and regulation, and all these are absolutely valuable and essential parts of an effective market. But probably through the evolution of the way markets have evolved and the intermediaries and the way it was, there just seems to be a huge amount of friction points and inefficiencies and costs involved in a lot of this. So that's kind of our ambition, is how do we use this technology to create a new way of creating new markets where more people can participate. And for asset owners, particularly the liquid assets, and I sit in Hong Kong, which is the most expensive real estate market on the planet by some margin, and even small domestic apartments are off the charts expensive, far less the sort of building I'm sitting in right now in central Hong Kong. These are enormously valuable but hugely illiquid assets, and there are therefore difficulties with people who own those assets dealing in them, other than in the very traditional way of I've got a bank mortgage, or I'm going to create a real estate trust, a REIT, and then list it on the stock exchange. And so we were looking at it going, there must be a better way to create an opportunity for owners to liquidate or partially liquidate, these types of assets. And perhaps even more interestingly for me as a participant in this society, how do people get on the property market in this town? I mean, I think you could probably find a small bolt hole in the far off reaches of Hong Kong for a couple of $1 million. It's not where you'd want to live, but that's kind of the entry point of this is kind of the entry point of this market. How do we get the vast majority of people in this community to be able to participate and to get a foot on that property ladder? Because it's extremely hard to do it at I've managed to buy myself an apartment level because of the barrier to cost of entry. But I can get myself on there by owning a piece of real estate. It seems to me to be really, socially inclusive, opportunity for people to get on board to these sort of runaway markets. And that's just real estate. There are many other asset classes that I think have different social and economic kind of benefits. So that was kind of probably the overall objective of how do we create new and more efficient marketplaces using technology. And I mean, I could go into a lot of detail around this and conscious of time, but one of the things that we're working on actively with the Toco engine is the way we're going to use this technology to disseminate information about underlying assets in a way that just isn't happening necessarily today. Not only for the first time kind of fundraise or sale, but actually to allow people to come in and have sort of real-time access to what would be otherwise expensive due diligence information. I want to come in, I want to buy an asset class. Well, I'm only going to come in at the $100 million level because it's going to cost me $3 million in due diligence, this, and all this other sort of craziness that has to happen in terms of people being able to move into these types of assets. But we're looking to democratize data and information around the underlying assets and provide that on an ongoing way, and actually ultimately to record that information on the blockchain so it's available to would-be new investors in real time, so that they can come in and compare asset by asset. Well, this is what I like. This is the piece I'm looking at. I'm going to compare across different projects and find the ones that meet my my risk profile or my ROI profile or whatever it might be. And that information is there, and I can do it in real time rather than this kind of barrier to, well, what would I invest in and which ones, which is the right project for me. So, using this technology to disseminate information and provide transparency. And I'll share an insight. When we went to, we've been looking at real estate projects in a number of markets actually. But when I've raised that issue around, democratization of information and transparency of underlying real estate asset, we've had two very distinct, different responses from property owners. There are those who, no, I don't want them to know what's going on. And I was like, oh, really? Okay. And then we've had those that are like, fantastic. I want to show the world how good I am at managing this asset. So, and immediately to me, just perceiving those very clear differences and these are differences that I'm seeing from an owner of a commercial building asset in the same market, and yet there is a real void between, the level of appetite for transparency, I would call it, made me think, wow, people are still doing things with both of these or these types of asset owners. This technology might drive a situation where we are, either you provide the transparency or you're uninvestable. That to me seems like not only a fantastic opportunity for good people running good projects and for investor protection, but it completely aligns with the regulatory issues around investor protection and making sure that people can see and understand what it is they're buying. So, some of those kind of ways of using this technology to just make it a better marketplace as well.
Sure. So about this piece of art you have next to us, can you give us any background, how it was chosen, and maybe a little about the artist?
Yeah. So we have an art wall here in our Hong Kong office, and we have a rotating kind of art collection here, and we work with John Macy and Sons, which is an art auction house here in Hong Kong. And we went to John and said, we want to do a test case for our Toco engine. We'd like a piece of art. And so he helped connect us with the artist who was up in Beijing. The specifics of the art selection it was one of the greatest meetings I've had in my life as a lawyer. I guess it had nothing to do with law. Maybe that was why it was so interesting. But for one, Wang Jiabao already speaks, Mandarin, and I don't, and nor did several of others. So the whole thing was being done through translations. But we did a Zoom call in his art studio, which is kind of in his house, where we wandered around looking at pieces of art and opportunity, which one we wanted to buy, and we explained what we were doing around tokenization. It was really interesting because he was, and we wanted an artist who was interested in doing this, not just, he can obviously sell his art in the ordinary way, but we liked the idea that he went, all right, so I'm going to be the artist that's producing a painting that will be the first painting, certainly that I'm aware of in this market, that's ever been tokenized in this way. So the fact that he was engaged and interested in participating in this new way of fractionalizing and selling the artwork was good from our perspective. And then, the specifics of the artwork, and we had a bit of a deadline looming because we wanted to announce this and launch it at the Hong Kong Blockchain Week conference. And then it got even more truncated, the timetable, because the conference was virtual. We had to pre-record everything, which was news to me. All of these live conferences a lot of them are being done pre-recorded now. So we had to kind of make a decision. This was actually a piece of art that was partially painted, and the reason we couldn't actually get a completely individually commissioned one was because of the lead time and the 2 weeks it takes for a painting to dry and the need to ship it to Hong Kong so it could be here for the conference and all of those good things. And then, I mean, we had one of my partners, Cecilia Rivers, who's the managing partner here at our Hong Kong office. She really wanted some of the other artworks in this series involve, a young boy and the horse and a torch. It's from the series Finding the Light. In this one, we've got obviously a lighthouse on the hill. But Cecilia was very keen on having the boy with the horse in this one, was trying to convince the artist, could you just put a boy on the horse in this one? And he's like, no.
That's not how it works.
So it was a really fun, discussion. There are a couple of, nuances in the painting where we did, we argued about could we have one yellow poppy in the field. Didn't get that one either. But there are a few pieces in here. That was the process. It was really, good fun and interesting. And then having the discussion with the group of partners, here I think there's 16 of us who have participated in and acquired one of the 16 tokens we created.
We talk a lot here about, frontier use cases, things that weren't possible before DLT technology. And I can absolutely see how an artist would want to be involved with something so cutting edge.
Interesting, yeah. And that's what we did with this. We actually used a non-fungible 721 format for this painting. And actually chopped up. The 721 allows you to put a picture into one of the token fields, and the 721 is a picture. So we actually chopped the painting up, or a picture of the painting. We fragmented into the 16 different pieces, and so each token is actually unique in that respect. It's 16. The economic interests and the rights associated with each token are identical, but each token actually has a different part of the painting. I happen to have the lighthouse bit, which I think is a good one. My IP partner Ed Chatterton got the horse's ass, which was just priceless. The lucky draw around that piece. But what was also interesting when we did this, we did do a lucky draw of the participants to get their piece. There was immediately a secondary market emerged. Well, I want your piece, and I want this. I'm like, guys, they're the same. You're all entitled to the same level of profits and this and rights. But there was immediately a differential. Now. And we did this partly to watch some of these kind of market reactions. And in the context of what we're doing here, it's obviously it's more of a mental exercise and sort of seeing these forces. But when we scale this up to, well, I've now got a tower block of residential apartments. If we have tokens that aren't necessarily, there's two ways of doing it. A token could be a fraction of the whole, or it could be a fraction of an individual unit. An individual unit that's on the top floor that has the sea view is going to be, financially genuinely different to the value of the unit that's on the ground floor next to the bins, kind of thing. So it was an exercise we did to sort of drive and observe market forces. And I did literally stand back and observe this happen. It was quite interesting. But I think we did it to learn as well about how this could change the way in which we will fractionalize, use back to the real estate example, and how you could have different tokens for different apartments within a single block. And again, to your point about technology, that isn't something you get with a REIT today. I mean, people, the real estate lawyers will go, well, we can already fractionalize real estate and do it in a REIT. So really, could you do this? Like, well, no. Why would you want to do that? So, because I've just watched my partners fight over who wants the lighthouse. That's why.
Sure. Yeah, it's going to be fascinating to see how the secondary markets develop around these tokens.
Yeah. I also think it was a really good technical exercise from a program perspective, because we were, as an entity, we were moving towards some type of MVP. And with this opportunity to build this art piece into a fractionalized asset, it really tested the different functions of several modules within the TOKO program and the product itself. It also lent us a lot of insight on actually where we needed to make iterations, modifications, and then actually seeing the legal process integrate directly with the technology build process was very interesting, because most of our engagements prior to this were mainly focused on getting the user requirements from the client and then building something in the form of a design build architecture. And you technically already knew the requirements from the business side, but then there was no regulation piece to actually govern how the business could function. And so in this case, specifically with a piece of art, it was quite interesting to see Scott and his legal team of great legal minds and experts sitting in a room, figuring out the legal component of how this would work from a structural perspective, and then giving these requirements to our program team and then our tech team, et cetera, and trying to figure out actually how to build it. That was the really great experience of the marriage of the two. And that's why, going back to Scott's point in the very beginning of this conversation, is the legal aspect of this industry moving to security token offerings is quite essential, quintessential actually. And also, as this scales up organically, the type of ecosystem that you need is really the spine and the backbone is within the legal interpretation of a lot of these different asset opportunities.
Yeah, I mean, to summarize that in one line, and it was one of the tech team said, and we want to do this, and explain something that they wanted to build. And I said, and we're all going to go to jail. You know.
Well, that's one of the things that I think happens a lot in the blockchain world is they try to build everything from the ground up without the expertise sometimes that is necessary.
Yeah, and that's where, I mean, I think, Jeff, it's kind of so obvious to me because we're lawyers. You know, we come at this from a perspective of the regulation. And, what we're talking about with asset-backed tokens here, these are regulated security products. And regulated security products are subject to laws in almost all jurisdictions, and every jurisdiction has a different set of laws. So that it's a very complex framework that you need to operate these within. But we built the engine with that complexity kind of in mind because we know that's the problem we're going to need to solve. And it's fundamentally different from the way you would go about building a tokenization technology solution that was going to create a cryptocurrency or a CBDC or an unregulated utility token. And there are still such things in other parts of the world. I know it's no longer the done thing in the US, but these kind of unregulated assets do not have any of these regulatory problems attached to them, unless and obviously until the SEC or some regulator decides that you got that analysis wrong. But that's been the problem. There's not the problem, but the reality of much of the market to date has been, let's define it as an unregulated utility or some other token that's not caught up by the law or cryptocurrency, and then we don't have to worry about all of that stuff. And great conclusion, because all of that stuff is enormously complex and evolving, and the regulators all around the world are in the midst of changing the rules, and they're wanting to get involved, but they're nervous. So it is a complex web of legal compliance and regulatory issues. But we built it with that as our starting point, and then put the technology on top to support that ecosystem. Because you can't, coming back to the dream of you can tokenize anything and make it available to the market to create liquidity in secondary market activities. If these are security tokens, which they will be, and in my mind, every time you try and get around it being a security token, and there are loads of ways of doing it, you end up with a rubbish product, actually. Sure. Almost by definition, it becomes less investable or less interesting, or, as soon as it really has that, it's that kind of it looks like a duck and walks like a duck. If it is the sort of thing that the market really would want to buy and would really appreciate in value, then it's probably regulated. That's kind of my, people come up with great complex arguments as to how we can avoid. And I'm like, yeah, but in avoiding, you're taking away some of the benefit of what are we trying to do here. So let's not avoid, and we've been doing that. We've been in the sandbox here with the SFC, our SEC in Hong Kong. We've been speaking to them. They know about. They rang me up and had a chat about what we did here, and we've been working with others. We've had a consortium and some projects in the SFC sandbox, for much of last year. So we've been, not trying to sidestep the regulations and the regulators. In fact, we've knocked on their door and said, hey, this is what we want to do. Let's have dialogue with you about, what we're doing and get your input. And that's been a really valuable process.
Well, hearing about all the complexity, I'm happy that now we don't just have one, but two of the largest law firms in the world.
Yep.
Just got Denton's last month. Very exciting.
Well, thank you guys. I want to just jump in, Scott. A lot of good information there. I know the viewers will appreciate this sort of candid conversation. And a few things stood out to me. I find it fascinating, the sort of dichotomy between somebody who might be a client, who might be in possession of one of these large illiquid assets, and then creating this market. And I think you mentioned the term social inclusion and sort of breaking down the barrier to entry, which in most cases is cost, and how that would translate to other assets that could be tokenized. And I'm sure there's other things in mind besides real estate and art. And I wonder, something popped into my head when we were preparing for this, and I thought there are certain things that exist in the world. They might be intellectual property or otherwise, but for some reason I thought of something like a catalog of music, and something that's so profoundly important to society and culture as like something like the Beatles catalog of music, or Michael Jackson's catalog of music or something. And should that be something that's in the control of one person or one singular entity, or maybe should that be something that is sort of distributed, and the type of things that could arise from something, I guess, that falls closer in line with the artwork. But along those lines, what other types of assets do you see being some of the lower hanging fruit that could be a really good fit for this type of project?
My thinking around that has evolved over time, and it started, we've obviously been, I've mentioned real estate a few times, and it's a really obvious one. It's also a massively complex one because these are regulated assets that sit on land registries, and so you've got a central government repository of kind of record keeping that occurs there. So actually, in many respects, I wish I hadn't, spent so much time early on looking at real estate, because it's complex. If you look at, a catalogue of music, or indeed any other bundle of intellectual property rights, they are, some of them sit on registries. So, a trademark portfolio might sit on the trademark registries or whatever else. But they're relatively benign registries, if you like, in that they're quite easy to deal with, unlike, say, land registries. And typically, you don't have to pay things like stamp duty when you have changes of owners and things of that nature. So there are tax and commercial issues as well, in terms of where the asset sits and what happens if you want to change ownership in it. But intellectual property rights in all its form, and whether that's sporting, franchises, or individual, sports personalities who want to, fractionalize their own career, if you like. And the upside, we've seen examples of that with Spencer Dinwiddie in the US, the basketball context, and I think there are opportunities for more like that. But I also, thinking, one thing that's happened after we launched Toco is a lot of people have rung us up and said, hey, we've got an asset or a project or something in mind. I've been amazed by the diversity of asset classes, and I won't go into details, but in general terms, there have been books of debt, there have been subsea deposits of minerals, there have been rare earths, diamonds, gold. There's all sorts of commodities. There's actually been a huge variety of assets that have come up, and I think one of the things that's interesting is that we're seeing probably the market for assets that the banks aren't used to dealing with are quite interested in what we're talking about. Because if you try and go and do this in the ordinary way, well, I haven't done a lot of subsea deposits of that particular mineral deal, so I'm just going to say no. So I think what it will do is, this will provide ways for alternative financing in asset classes that aren't currently very well understood. And actually, intellectual property rights is a great example. I don't think lenders are very good at valuing IP portfolios. Security over intangible assets is an area of great complexity, and I think largely misunderstood. What is a brand worth? What is a brand worth if you separate it from the secret formula to make the fizzy drink that usually has that brand on the front of it? So there are areas where it's quite difficult, I think, for traditional markets to handle. So I think unusual asset classes is actually something we've seen sort of emerge since we've gone public. But then I think there are some really big global opportunities here as well. I mean, carbon trading, I'm not a carbon trading expert, but from what I can tell, nation states are doing a terrible job of creating anything like an effective global trading, for carbon credits. And, it's either all driven by national agendas or, domestic agendas, very little transferability cross-border. I mean, the idea of could we take and create tokenized carbon credits on a global basis seems like a huge opportunity, just for example. Now, it's not a project we're working on today, but when I think about it, there are so many of these types of currently poorly served marketplaces for rights, and that's what I almost think of it as, it could be a physical asset like a painting or a building, but it also could just be a bundle of rights. And how do we now take those rights, whether it's the rights, a fractional right in the Beatles back catalogue, and deal with them? I mean, maybe throw to you, Jeff, on this as well, because I think one of the things that we've been working with BCW on as well is that we've still got a lot of work to do on the current state. But the next, where we're heading with this and what we then bundle around these assets to make downstream services.
Exactly. Some of the areas that we're helping DLA Piper with is really on the go-to-market side, also with the partnership development ecosystem. And what does that really mean? It means that you have to have a clear and concise vision of where you want to head in terms of the products and services that DLA Piper wants to serve. Specifically in the regulated energy and unregulated energy markets with ESG projects. We actually see that a lot. Most of the partners we speak about, it's like, oh, hey, is DLA Piper interested in working with us to tokenize some of our ESG opportunities? And so we start with these kind of conversations and we go in. But I want to step back and actually talk about the complexity of your question, Jesse, and how it relates to the TOKO engine itself, or the TOKO platform solution. So post the Hong Kong Blockchain Week, we did start to get a lot of interesting deal flow in that actually tested the structure of the platform itself. And then when you get additional complexity along different asset classes, and then you've built something that's supposed to be versatile and also usable across different asset classes, how do you bridge that gap? And it's really been taking the mind share of DLA Piper, Scott, and then also multiple different stakeholders here at DLA Piper as well, to really fine-tune what that means when we move it to the next stage. And so our program overall is focused more on the strategy of which areas do we want to focus on in terms of what is the most beneficial for the potential client base that we want to target in the near term. And secondly, is it relevant? The relevance is quite interesting. The relevance question is quite interesting because now we're looking at DLA Piper and their general practice of legal services on top of the tokenization of very interesting assets. And the last thing is the feasibility of it. Like, can we make the system do what it's supposed to do? And that is our overall framework of working with DLA Piper to understand where this is going to go. So if you're asking, okay, what are some other potential use cases? I think every use case that is relevant can be amended to TOKO. It's a matter of prioritizing different functionality to make sure that happens. And especially downstream in the future, we're looking forward to the HTS, the Hedera token service, and then seeing what kind of functionality that actually brings in to make security token offerings more robust so that we can actually bake in a lot of these functionality, the attributes, and a lot of services within the native Hedera ecosystem for these kind of asset classes. And that's also another part of the program that we're really looking at, and then trying to do that discovery really closely with both Hedera as well as Scott and his team here.
Yeah, that makes perfect sense.
All right, Scott, beyond tokenization, what other Hedera use cases, if any, is DLA Piper consider?
There's a long list in my head, but I've been kind of busy with this one on top of the day job.
Sure.
There's one I will mention, and I didn't clear it with my partner, Ed Chatterton, but we are looking at a project around IP asset portfolio management. Okay. If you look at the way intellectual property rights are stored on multiple IP registries around the world, what you have is a fragmented set of databases that provide a basket of rights for rights holders, and there is often issues with synchronization of that information. So yeah, that's one example of a project that it's nascent that we are looking at to a certain degree. There are a number of other, whether it's provenance, supply chain management, fraud, and sort of anti-bribery and corruption type identification and monitoring and managing solutions as well. But these are all in the up there in the ideas kind of blue sky at the moment.
Sure.
But the IP asset portfolio management solution is one that is beginning to crystallize.
Good.
Yeah, I like the idea of the IP, the notion that you could even unbundle sort of an IP catalog and start offering pieces of individual items within the catalog, whether they be songs or novels or whatever they might be. But I'd like to think sort of for the little guy, so to speak. And I imagine people doing things like you'll see people buying the naming rights to a star or something and gifting that to somebody or something that really generally wouldn't be perceived as having any real value, but it's a nice thought. You thought of them and it was something. But if you could gift something in a similar vein, going back to sort of the inclusiveness, and if it was affordable enough that it was divisible, obviously it would be divisible to whatever extent it would need to be, that somebody could give something meaningful, like a portion of a song or something to somebody, and that it might actually have a chance to appreciate in value over time, even if it was $50 or something, and you own 1/100th of this song or something, and that's something that could be really special, and get rid of the name the star market and actually move into something that could be more tangible and more meaningful. But let's step back a little bit from the Toco project, and one final question for you guys. I want to thank you again for your time. Very generous. For both of you guys, I want to ask, what do you think the future of Hedera looks like in general, whether that's sort of related directly to what you're doing now or just a bigger vision, or what are your overall thoughts on what Hedera looks like, say, a few years from now?
Want to go first?
Yeah, I'll go first. Well, from the BCW perspective, I think for the SEO ecosystem to actually thrive, there might be three main things in the near term that have to be in place. One thing is you have to have the asset issuers, asset owners, the full ecosystem with exchanges, dealer brokers, custodians, et cetera, to be on board. And then build up that liquidity for the market to actually function. So that's one. The second thing is really having more collaboration between the best of breed technology companies and then institutional players like DLA Piper or banks, et cetera, financial institutions, to get that kind of mind share that you need to actually scale this up. The last thing is the level 1 protocol. The standard needs to be in place. And I think, of course, Hedera, we're all here. We have faith and we believe that is a long journey to get there. So hopefully, I hope that within 2 years' time or a year's time, that will be the standard. And you have all of this deal flow and potential opportunities to really make a change in the financial services industry, not just for liquid assets and quite complex projects, but just the overall investor base can actually increase. So we're hoping that Hedera will, of course, launch the HTS service soon, and then we can actually integrate into it properly and then scale it up and get the traction that we need to build up this ecosystem.
I'm going to take a slightly broader brush to the answer, and obviously we're a little bit focused on what we've been doing. But I think another reason why we liked the Hedera project was their desire to do it right. And Manson Lehman have been often quoted, as talking about building the 100-year company. And when you bring that mindset, which they do, that's not a strap line. That's the culture of the organisation. Then you don't have to worry about what we're doing tomorrow, as if the future of the company kind of depends on it. So they really bring that. Well, we're not going to do something tomorrow if we'd be better off doing it next month properly. And that was one of the things we liked about the approach, because what we're doing is, trying to put together a enterprise-grade, large-scale, solution for clients with very valuable assets. So it needs to be right. But to your specific question about what does the future look like, I think with that kind of culture of building it correctly, there is and creating this somewhat unique governing council made up of very large enterprises. These large enterprises, of which I sit in one, so it's frustrating sitting in a large enterprise. It can be slow to do things. It's slow to get approvals. To get where we've got to with our tokenization engine. I've had a lot of conversations with our board and our risk teams and compliance teams. These are not conversations I would have to have if I built my own startup. And what it means is we've had to be more cautious in what we're doing. And I know that the reality of a lot of the applications that are being built, including by the council members themselves, are going through that. What can be perceived, I think, externally as a slightly slow, what's happening. And until things get announced, it can seem to the outside world like maybe nothing is happening. And that isn't the case. I'm privy to conversations, and I see what other council members are working on. And so while these announcements aren't coming out very quickly necessarily, I think what we will see in the even arguably short term, certainly medium term, is we're going to start to see the types of enterprise-led, high-quality application deployments that will not just be a piece of news, a soundbite, but they will be a seismic shift in what's happening in the ecosystem that they're going to change, because the nature of these projects and the caliber and level of influence of the companies that are looking to do these things, when they do announce and they do bring these things out, they are going to be very substantial changes in the way those ecosystems are operating. I'm being deliberately vague because I'm not in a position to disclose any details, but I think the reason for explaining that kind of insight into what I'm seeing is to come back to your question. I see over the course of, and I think we're going to see this year in particular, a number of announcements that are going to be of real interest in terms of, wow, look at what people are doing with this technology, and they will be game changers in terms of the adoption of this technology into the traditional marketplaces, to change those marketplaces, to change the way things are being done. And I think that's going to be really interesting to watch that evolution. And I'm an impatient person. I'm forever badgering the Manson Lehman. Can't we get more news out? And they're very much we'll get news out when it's the right news. So I think that's going to be interesting to watch over the near to medium term. And the future of Hedera is going to be a steady drip stream of high quality projects.
Yeah, that's interesting to hear, and thanks for that insight. It calls to mind. We had Manson Lehman on not too long ago, and one of the things that stuck with me from that discussion was Lehman made a comment that while you might have some of the startups and some of the smaller entities entering the space might be a lot more vocal and understandably so interested in attracting attention and creating that gravity, while some of the larger enterprises might be exactly the opposite, and they might just be taking their time and might not have the same incentive to announce something that wasn't ready to be announced. So point well taken. And with that, I think we're gonna close it out here, guys. Thank you again so much for taking this time with us. Brandon, any closing comments here?
No, I've enjoyed the entire conversation, so I appreciate both of your time.
Thanks, Jesse. Thanks, Brandon.
Thanks, guys. We'll hope to talk to you again soon.
Absolutely.
Thank you.
Bye now.
See you, everybody.